Hello, welcome to the Real Estate Regroup Show. I am your host, LJ Walker, a real estate investor helping you realize your dream of owning a home or investing in one. Today's show, I'm going to be speaking to you about no money down loans. Yes, they do exist. First, USDA loans. Yes, these are loans that are normally given to home buyers who choose to live in rural and suburban areas. It's typical that it's given to people with low income, okay? But your income has to be 29% or less of your monthly income, and your debt can't be more than 41% of your income. So this is very, very important. Income limits can vary, so go to https://www.rd.usda.gov. As a matter of fact, you know what I'm going to do? I'm going to take this link and I'm going to put it on my YouTube channel. My YouTube channel has actually been named to the Real Estate Regroup Show so that it'll make it easy for everybody to find. And there you can find what the income limits is for your state and for your city. It's not the same all over the country, so you definitely want to check that out. And don't disqualify yourself and say, oh, I make too much money, because you probably don't. A lot of you, what I find is that a lot of people will dismiss and discredit themselves even though they qualify for something instead of giving it a chance. And the truth of the matter is, even if you don't meet all of the requirements, guys, sometimes exceptions are made when not enough people actually apply to things. That's why you should never count yourself out. As a matter of fact, my pastor, she was preaching the other day. She said that women are often overqualified for things that they don't apply for. Men are underqualified and will still apply. That has to change. That's definitely a mindset shift that needs to be discussed. Unfortunately, I'm not a psychologist or psychiatrist, so I can't go into that too deeply, but I am seeing that, I have to admit. All right, getting back to USDA loans. All right, some of the rates, the interest rates for these loans can be as low as 1%. How good is that? Now, next, I know some of you worried about credit, so let's get into it. They do want to see a credit score of 640. However, if there is a dent in your credit due to such things as medical care or a natural disaster, they're willing to overlook that to a certain point. So that's why you should still apply, even if it's not 640. If it is, great. But if it's not, and there's a reason for it, just make sure you have proof of that reason. Letters, if it's a natural disaster, pictures, something, a receipt, and a lot of you think that you can't get receipts. Some of you can. It may cost you $3 at Western Union or MoneyGram, but they do keep a history of your receipts. You can go to your bank. They might charge you $1, but get that receipt so that you can get that loan, okay? Next. Now, the next two, most home buyers are not going to go this way, and I really don't recommend a home buyer to go this way, to be quite honest with you. The next two would really be more for real estate investors. Number one, private money lenders. Private money lenders are typically people that you know or people who you are affiliated with. They are normally Not always friends and family. Sometimes, let's say, like how I belong to the Real Estate Investors Association of New York, they can be other people within that organization that I choose to use. Or let's say how I have a healthcare savings account with a particular company, and I also have a self-directed IRA with a particular company. I can go to the administrators and say to them, listen, I have this deal. I need some cash to buy this deal. And they will put it in the newsletter that I am looking for people to team up with to purchase a particular deal. That is an avenue, an option that I have, and that's an option that many other real estate investors have as well. And then the next one is hard money. Hard money is when you're getting money from private institutions, people that you don't know very well are hard money lenders. Now, private money and hard money, their interest rates are normally higher. What's great about buying from them, you may say, is the fact that with banks want to put your personal name on everything. When you own a business, you don't want your personal name. You want to use your business name. So that's why a lot of people go ahead with private money and hard money. When this is the case, because the interest rates are a lot higher than the bank, most banks, first of all, will not let you do no money down loans. Some private money and some hard money lenders will. What they are looking for, of course, is that the property, the return on investment, is higher than the interest rate you are borrowing. And they also are looking for people who have experience in real estate. If you don't have experience in real estate, it's going to be a little bit tougher for you to get that private money and that hard money loan, to be honest with you. So you might have to partner up with someone in order to get one of those particular loans. Okay? So guys, that's all I have for you tonight. Hopefully, the information that I've shared will help you make smart financial moves, especially since I've given you different financing options that you may not have thought about before. Anyway, please feel free to share this, pass this along. Remember, each one, reach one, teach one, or reach and teach many, however you wish to say it. Bye for now. Have a blessed day. Enjoy. Until we meet again.